Bangalore in the month of September, on 2nd September 2022, and the kind of response or the kind of interest shown by doctors was really appreciable at that point of time. So then immediately we thought the session was also interesting, the speakers were interesting at that point of time. So then we thought, why not we can conduct similar meetings in Hyderabad as well to the close doctor circle. That's how I requested our partners to why not you please come to Hyderabad and then start these sessions. Immediately they were accepted, and then that's how this whole event has been planned. And so considering the current regulatory requirements in India, the kind of discipline the government is actually expecting every one of us to comply with, so we felt educating certain things about these topics is relevant at this particular point of time. So that's how these topics were chosen. We have chosen very limited topics, around 4 topics which were selected, and each topic will be dealt by experienced professionals who are well versed and experienced in this particular area. And each topic hardly will take up 15 minutes, and we'll just try to give you a brief about that particular subject. And generally, when we interact with doctors, particularly many of the doctors, because we have few doctor clients already, when we speak to them, sir, we don't know your debits and credits. We really can't understand your debits and credits. And even when I started calling some of the doctors in the last few days, last 1 week or 10 days, in fact we had the same questions. Do you think we can really get into your terminology of accounting and finance? I said, no, it's our responsibility, sir. Our objective is that only to give you some clarity on that terminology and then subject. So that's how the doctors, many of the doctors express this particular aspect. And in fact, sir, just to tell you, many of the clients, sometimes those in some of the organizations, some corporate entities, where the people are in senior positions who had marketing, who heads HR, and who heads certain senior positions in the company, who are employed in a particular company. Many of them at some point of time, what happens, they get frustrated in their execution levels. So then they say, always say, no, why not we start the same business on our own? And then when they come to us, and we generally talk to them, okay, what are you presently doing? What is your experience? They say, no, I'm heading the entire sales department, entire zones are in my control. And whatever I say, then only sales will happen. Somebody will say, entire procurement department is in my control. No, I only know entire requirements of the hospital or entire requirements of the organization. But we only ask only one question. So do you know anything about finance? Do you know anything about operations? Do you know how to manage cash flow? Then an entrepreneur who wanted to actually start that particular, want to get into their business on their own, they need to have, at least reasonably good knowledge on managing these finances. So then, we will educate them. Then, it will be easy for them to understand, because just because you know the sales and the marketing, you can't really start your own activity. In fact, sir, to our surprise, many of the hospitals can't grow as expected. It's not because of the quality of the treatment what they give. It's not because of anything else. The doctors are good in their profession, but they should actually, the important point which will be missed out is how do you treat people, how do you manage people, how do you manage your cash flow, how do you manage your hospital. That makes actually a hell lot of a difference, because we have seen hospitals where they started with high expectations, huge investment, but ultimately, they cannot grow to the expectations as was originally planned. This is one of the important reasons which we could actually see. So that's how actually this is important area to all of you to understand. And sir, as you know, in hospitals, doctors will spend a lot of time on maintaining patients' records. Particularly, you understand, you take a lot of decisions during the treatment. You record all those decisions, why, like under what conditions you are taking these decisions. This recording is very important, because as doctors, you are actually you are answerable to the either medical councils or to the governments whenever there is controversial or consequential issues are damaging. Similarly, about your business, about your profession, about your financial issues, whatever you earn, whatever you spend, now we are supposed to maintain a lot of documentation, because you are again answerable to many regulators in that angle. So in that sense, all of us, particularly doctor, we should know the certain basic financial issues, about tax issues, about GST issues, to handle them in a at least in a reasonably comfortable manner. May not be excellent, at least in a reasonably comfortable manner. So in fact, many of the doctors, when they come to us, they will not have full information about their own affairs, which are very, very important, because many of the doctors, many of the people, not only doctors, many of the people come to us, they would have purchased property worth of crores, but they will not have documentation clearly. So, and if we feel that it is a year-end activity which to be carried on, which will be damaging to us, so our own financial matters has to be planned and organized on a periodical basis. Then it will be easy for compilation of the year-end. Year-end only you have to only consolidate, and then should be in a position to file those returns. Right, sir? And so when we interact with many of the doctors, they are all busy with the patients, and since they don't give time for their own financial affairs, they don't record it, they don't create evidences properly, it will be tough for them to. And sir, mainly I would like to just say that, since we are very closely monitored by governments, we are in the regulatory world, very closely regulated world. The cost of compliance versus cost of non-compliance always look to be looked into. Doing as required, doing in the prescribed manner. What is the cost if you want to do that? If you don't do as per that, what is the consequential issues if you don't comply certain things? So these two are very actually important. We'll, give you some brief ideas, and he will moderate the whole session. Our partner, Mr. Amit Patel from Mumbai, will guide you on the direct tax matters and succession planning matters. Other partner, other associate, Mr. Mallikarjun, will handle on GST related partner Sachin Kumar to take over the session and start the proceedings. Welcome, Sachin. Thank you.
Good evening, ladies and gentlemen. It's a privilege that we are here today addressing elite doctors on the various topics. In fact, as KSB mentioned, there's a lot of similarity between doctors and chartered accountants. And to begin with, you take care of human lives, but we take care of corporate lives, business entities basically. You have diagnostic tools like sphygmomanometer, you have like stethoscope to identify the ailment of a patient. We have diagnostic tools as well, and we call it as analytics tool to diagnose the health of an organization. You treat patients and we treat organizations. And when patient is sick, you administer kind of tablets or for the recovery of the patient. Similarly, we have a rehabilitation plan for the organizations when they are sick. So if you look at that way, there's a lot of similarities that what we do and what you do. Probably, the domains are, you work on human lives, we work on organizations. So as much as for a human being, you ensure that the blood flow in the human being, in the body has to be perfectly in sync, and it has to flow smoothly for a person to be healthy. A cash has to flow within the organization smoothly for organization to be healthy. if there is a choke in blood clots, so therefore heart chokes. If you have too much of a receivables in a business, that chokes the business. So therefore we have to understand those entrepreneur doctors who run their clinics, who run their hospitals, who run their nursing homes. It is important for them to understand the value of the importance of money. You may say, yeah, we know that. What is so great about understanding money? Money is not just earning money. There are three aspects of money which our professionals out here, Jai Kumar, would address those aspects of the importance of the money management. Basically, there are three aspects of money. One is earning money, second is protecting money, and third is growing money. And if you look at of all the three, earning, protecting, and growing, which one is the toughest one? Earning money? Definitely not. That is the easiest one. Earning money is the easiest one, whereas growing money is the toughest one. Because earning, anybody can. As much as doctors you earn, somebody outside there in this outside this hotel, even a vendor, any vendor earns money. Earning money is not that difficult. But having earned money, how do you protect it or how do you grow it is very important. So that how do you grow? As when you sleep, your money has to grow. Right? So how do you make it happen? Therefore, we have our Jai Kumar and he will address on those aspects of investment planning. And then it so happens that the regulatory changes in our system is so rampant that we have something called GST now. And GST, there have been a lot of discussions on healthcare professionals and doctors, whether GST is applicable or not for doctors. And generally, the understanding is that because it is a healthcare, so therefore GST is not applicable. But there again, we need to make sure whether you are curing the patient or you are taking care of the patient. That distinction has to be there, which our colleague Mr. Mallikarjun, he will address on this aspect and bring out the nuances of what is taxable and what is not taxable. As long as it is, and he will of course address that particular aspect of, as long as it is medical services, then it is exempt from tax. And if it is a cosmetic services, then GST is applicable on those aspects. So these nuances he would be able to address, and if there are any questions on this, we would welcome the questions on these discussions. And then we have Mr. Amit discussing on succession planning and income tax issues. In fact, when you look at income tax issues and GST and so on and so forth, one thing that comes to our mind is about, let's say, 15, 20 years, my father is a doctor. And I know when my father started his practice or when he was going to hospital, the only thing he was supposed to know is medicine. And income tax didn't really matter, GST really didn't matter at that particular point of time. But today, or for that matter, IT didn't really matter at that particular point of time. Today, if you are running a hospital or a clinic, you need to know a little bit of, servers and IT related things. You need to know a little bit of finance. You need to know a little bit of income tax and GST. And besides all these things, your core competency of medicine is what you're supposed to know. So in this aspect, some of them, they say, compliance is too burdensome. And for those who think that compliance is burdensome, please try non-compliance. See what happens. So it's much more expensive to be non-compliant. So therefore, understanding what compliance is all about, we have, as far as income tax is concerned, we have Amit Bhai who will take us through that compliances under Income Tax Act. And it's also happened in Bangalore when we have doctors community whom we serve. And one of the doctor came to us and he was in 60 plus years, and he said he had a good, decent, very decent, good practice, and he was having a small hospital thing, and I want to go to my farm and start farming. Then I asked why. He said, look, son is there in US, daughter is married and she's in Australia, so nobody is to take care of it. With the doctor to explain, winding up is very easy. For a hospital or clinic, winding up is very easy because it's you wind up clinic. But what is important is, as a doctor, the social responsibility what you have. Possibly for that hospital, so many dependency is there in that area. Right? So many people have been coming to that, and you have been rendering services, you are generating income, and you have been paying taxes. So therefore, the tax revenue to the government, the societal obligation, all these things will be at stake if you were to close down that particular. So therefore, succession doesn't mean that son is not there or daughter is not there. Succession doesn't simply mean that it has to be your own people. You can always convert this into an organization. Your practice can be converted into an organization, and that organization can be run by professionals. Succession planning doesn't just mean that it has to be your children. It can be even handed over to set of professionals who will run that. So this aspect as well will be covered in succession planning. These are some of the things that you can expect from today's deliberation, and any questions that you have, please raise your hands and we're more than happy to address your queries. And with this brief intro, may I request Mr. Amit Patel to come over and deliver his talk. Thank you, Amit.
Good evening. Can you hear me? Okay. Thank you all the doctors who have come today. There was a mention about trying to keep it simple, this kind of subject. I will try to keep it as simple as the prescriptions that all of you must be writing for your patients. The idea of having this particular program, of course, Sachin has already mentioned, but in the context of taxation in particular, because that is what I am going to talk about, and succession planning, of course, which is related to that, is the point that, as I was talking to one of the friends over here, Dr. Shah, before we started, that generally, and it is not about doctors, it is about anyone, any taxpayer in the country, that the immediate thought that that person tells us when we start talking about tax is that this is not my problem. My CA will do it, my CA will handle the matter, and he will figure out what to do, and I don't need to get into this. I think that is the key to the reason why we are having this, because if that is also your own thought process, then that could probably lead to disaster in the days to come, in the months to come, in the years to come, for the reason that the way the government of India has changed the laws of the country, for the reason that the way the government of India, and in particular the last 5-6 years, the way the government has changed the way it is administering the laws, it is such that it is no longer wise for any taxpayer in the country to say that I don't need to look at all this, somebody else will do it on my behalf. Unless you yourself take interest in your own matters, unless you yourself be diligent about your documentation, about your paperwork, etc., nobody in the country will be able to help you, for the simple reason that the government has got a fantastic infrastructure of technology at its disposal, and that infrastructure is keeping track of everything that you are doing, which I am doing, which my wife would be doing, what any citizen of the country is doing. All of us are under watch by the government, and they have everything, and they are going to sit and only match what you are telling them about yourself with what they already know about you. And if there is a mismatch between the two, there is going to be a big problem. So it is in that background that we are going to talk today about a little bit about taxation. Yeah. So the first question, and this is not a philosophical question, what are you? Okay. What I would feel is important for all of you to be very clear about is, are you an employee of a hospital or a clinic? Or are you a consulting doctor in a hospital or a clinic? Are you a self-employed doctor having your own practice, your own clinic, etc.? Are you an entrepreneur who runs a startup clinic or hospital? Or are you planning to do that? Are you a proprietor of your own practice? Or are you partners in a particular medical practice? Or have you invested in a company which is running a hospital? So are you a shareholder? So you first need to have very clear idea about where do you stand amongst all these kinds of categories of doctors. And why is that? Why is this clarity important? It is important because the taxation, both whether it is under Income Tax Act or under GST, would depend on what you are. If you are an employee, you would be getting salary income. If you are a self-employed doctor, or if you are a consulting doctor in a hospital or a clinic, then you would be earning professional fees. That hospital or the clinic may be paying you retainership fees. If you are a partner in any partnership firm or LLP, which in turn is running a clinic or a multi-speciality hospital or whatever it is, then you would be getting either a remuneration from the partnership, or you would also be getting a share of profit from that partnership. And if you are a shareholder, an investor, you would be getting probably dividend income. So taxation of salary on the one hand is materially different from taxation of all the other categories, whether it is professional fees, whether it is dividend, whether it is share of profit, whether it is remuneration from a firm, or anything else. And that is why this clarity is extremely important. Now, if you are a salaried doctor working for a particular hospital or for a clinic, and you are getting salary from that particular place, then you really don't need to worry too much about the tax compliances. Your employer or the hospital, clinic, etc. would pay you salary after deducting TDS. All of you would obviously be knowing this. You don't need to register and pay GST. You don't need to maintain books of accounts. And you don't need, therefore, any audit of any kind of your books of accounts, because you don't need to maintain books of accounts. You will not be, however, able to claim any expenses to reduce your income. So this is the crux of the matter. Everyone likes to pay as less tax as possible. But if you are a salaried doctor, then there is no expense that you can claim from the salary income. Your ITR form, income tax return form, will be much simpler as compared to any other any other doctor. And at the same time, because it is a simple return, the time given by the government to you for filing the tax return is less. Generally, 31st July is the due date for filing the return after the year ends on 31st March. If you are on the other hand a self-employed or a consultant doctor, you need to be aware that there are innumerous tax compliances, whether indirect tax or direct tax. Your the hospital or clinic, I mean not employer, but the hospital or clinic where you are working would pay you professional fees after deducting TDS at 10%. You yourself will not need to then register for or pay GST. You need to maintain books of accounts, and if your gross income, your gross fees exceed 50 lakhs, then you will need a tax audit. Probably all of you may also be already be aware of this. If you are a partner in any partnership firm, then you will be getting share of profit. That share of profit is totally tax-free because the firm has already paid tax on it. If you are getting remuneration from the partnership firm, then that remuneration is taxable in your hands because it is a tax-deductible expenditure in the hands of the partnership. And if a shareholder gets dividend, then that dividend is taxable. If you sell your shares in that company, you will probably get capital gains, which again would be taxable. So if you are a self-employed doctor, what is it that is mandatory for you to do? First of all, as I said earlier, maintenance of the books of accounts. Maintenance of books of account, in our experience of dealing with doctor clients, is that this is one of the most neglected areas of a medical practice. And look at what is mandatorily required. Daily case register in a prescribed format. I'm very confident that 99.99% of the doctors in the country who are required to maintain this will not be maintaining it. This is a statutory requirement under the Indian Income Tax Act for a practicing doctor to maintain a daily case register, and there is a format over there. Then you also need to have details of inventory, your drugs, medicines, whatever else that you use in your practice. For that you need to maintain details of the inventory. I have at least not come across any doctor who has got this so far. Then if your gross fees, I mentioned this earlier, if your gross fees exceed 50 lakhs, you need a tax audit done. And if tax audit is applicable to you, then all the TDS sections, meaning when you make payments to other people, all of them will apply to you, and you need to therefore take care of the TDS compliances. So these are mandatory for you if you are a consulting doctor, if you are a professional and not a salaried person. One very important thing, and I must tell you, all of you should know this particular thing, because this is probably the most neglected aspect of Income Tax Act and one of the most misunderstood aspect of the Income Tax Act, presumptive taxation. In simple language, what it says is that if your gross fees do not exceed 50 lakhs, then there is a system of presumptive taxation which applies to you. And the presumptive taxation scheme states that, let us say, for example, your gross fees is 40 lakhs. So therefore, you are not more than 50 lakhs. Presumptive tax applies to you. So the scheme says that on a presumptive basis, you don't need to maintain books of accounts, but on a presumptive basis, your profit for the year, which is net after your gross income minus expenses, your profit, which ultimately is what you pay tax on, will be presumed to be 50%, and you can offer that 50% for tax, unless it is actually more than that. Okay. Now, unfortunately, in our country, most of the tax professionals are advising their clients that blindly you can offer 50% of your gross fees as your profit, from the profession, and pay tax on that. That is a completely wrong view. What you need to do is actually be aware of what is your actual profit, how much are you, what are your expenses. In this example of 40 lakh gross fees, let us say your daily, you're running your clinic expenses, salaries, this, that, etc. is, say, for example, 15 lakhs. So 40 minus 15 is 25 lakhs, which is more than 50% of your gross fees. The presumptive tax section doesn't say that, no, even in this kind of a case, you pay tax only on 20 lakhs. It clearly says that if your profit is actually 25 lakhs, you need to pay tax on 25 lakhs. So this is something that you please take, maybe it's a take home for all of you, that this presumptive taxation is very badly misunderstood and misinterpreted in our country. So if at all any of you is, having this kind of situation, please do consult, I would suggest you read up on the matter. It's not rocket science, it's not very difficult to understand. There are a lot of, there's a lot of material available on this. Our view is very clear that you cannot blindly take 50% of your gross fees as your taxable income. So this is one. Second is, if you are a self-employed doctor, having your professional receipts, or if you are affiliated with the hospital and getting retainership fees. In both the cases, question is, what kind of expenses can you claim? Obviously, the more the expenses, the lesser the taxable income, and therefore lesser the tax. So it is human nature that you try and reduce the taxable income by showing higher expenses. So the first thing that any client, when he or she comes to us and asks, is that, what expenses can I show? That itself is a disastrous, start to our relationship between a chartered accountant and any client. Because what expenses to show, I can't tell you what expenses to show. It is you who are going to incur the expenses. You have to tell me what expenses you are incurring, and then we will see whether those are allowable expenses, whether those are justified, whether those are reasonable. Please understand that income tax department is concerned with whether the expenses are justified with reference to your practice and whether they are reasonable or not. Now, why I am mentioning this is that many cases, husband and wife both are doctors, right? So the husband has got a larger practice. I'm just giving an example. Maybe the husband has a larger practice. So he has a probably gross fees of say 2 crore rupees, for example. And then his wife is also a doctor. So he says that I will give fees to my wife. She is a doctor, full-fledged doctor. She helps me in my surgery or whatever it is, So the salary is given to the wife. The salary is given how much? Maybe say 60 lakhs. Now 2 crore is the doctor's gross fees. Salary given to the wife is 60 lakhs. The question will come, is it reasonable? If you are taken services from a third party, not your own wife, not your own family member, would you have paid the same 60 lakhs to that person? Income tax department is fully entitled to ask you this and to get into these kind of issues. Now it is another matter that we have all got away with a lot of things all these years for decades. But we are now, as I said earlier also, we have now moved to a completely different regime of administration, where the focus is not on physical interaction between taxpayer and the income tax department, but it's a faceless one. And they have got ample time, ample resources in terms of software, etc., to analyze your data, which initially also Sachin had mentioned, the analytics of the data. So based on that, they are able to come up with all kinds of red flags, which tell them that in a particular case, there seems to be some mismatch, some kind of garbage that has happened, and then they are fully entitled to pick up your case for scrutiny. So check whether the expenses are justified and reasonable. Then are you checking the TDS compliances for the expenses? Generally what happens is that people start thinking of, or inventing expenses and putting them in the books, but forgetting the TDS compliances. So that's something that one needs to take care of. Then profession tax. Lot of doctors say that I've got 2 compounders, one office boy who takes care of one sweeper and one driver, etc. And I pay salaries to all of them. And salary 20,000 per month, 10,000 per month, whatever it is. Fine. You may have people working for you. You may be paying salaries to them. But please remember that profession tax has to be deducted from the salaries. So the easiest way for any income tax officer to find out whether your salaries which you are showing is bogus or genuine is to ask you where is your profession tax registration number, have you complied with PT or not. Now, the income tax department is connected with the GST department, in terms of data sharing. So whatever GST department has, they share it with the income tax guys and vice versa. So it is possible that if you have not done this, that is profession tax registration, and are not deducting PT, it is possible that the IT department may pass on the information to the GST department, and then they will come after you for the profession tax. Then cash expenses. Invariably, people put in cash expenses and say that my profit is to that extent lower. Please be aware that you cannot spend more than 10,000 rupees in cash per expense, per day. If you do that, suppose for example, car repairs. Suppose your car meets with an accident, you have to give for repairs, and the garage charges you say 21,000 rupees. If you pay 21,000 rupees in cash, there will be a disallowance because it is more than 10,000 rupees paid in cash, paid otherwise than through banking channels. So please be careful about that. And what kind of documentation do you have for the expenses? At the end of it, if your case is picked up for scrutiny, and if your documentation is lax as far as the expenses are concerned, or even why expenses, even if you have shown assets, fixed assets, your equipment that you install in your clinics, you may be showing your phone as a fixed asset of your practice, etc., iPads, etc., whatever it is. Any asset also purchased, the first thing they ask you is for the the bills for the purchases. So please be careful about that. So in terms of compliances, maintenance of books of account, TDS, filing of TDS returns, advance tax payment, this is an important one. All of you who are self-employed or who are not salaried people will know that you need to pay advance tax in the year, and the worst part of advance tax is that you have to estimate at the beginning of the year what you will be earning it for the whole year. So even on 15 June, which is just about 2.5 months after the year starts, you are supposed to correctly estimate that what will be my taxable income for the whole year. So this is an issue. Tax audit, of course, we spoke about it. Filing of ITR, regular matching of 26 AS and IS. I'll come to this a little later. In terms of income tax return filing, it is very, very expensive now to either not file the return at all or to file it beyond the due date. There is late filing fees, additional interest of 1%, losing out on the income tax refund. I mean, if you don't file the return, obviously you don't get the refund. If you have a loss and if you don't file the return or you file it late, you lose that loss which cannot be carried forward. And if non-filing of ITR is for tax evasion, then there is obviously very, very drastic consequences. One new thing that has come up now, and this could be of interest to some of you, if you have made investment outside India. And we have a separate session on investment by Jay Kumar and Amruta, where they will talk about investment. But a lot of investment advisors are now advising Indian citizens to invest outside India. If you do have assets outside India, or if you have any income outside India, foreign income, it is mandatory to disclose it in your Indian income tax return. It is very easy for Indian government to cross-check the data. There is automatic flow of information between Indian government and almost all the other countries' governments. And the Indian government has got absolute to the ground level details of all the assets that Indian citizens are having in other countries. And thousands of summons have already been issued by the Income Tax Department to people who have not disclosed the foreign assets or income in their tax returns. Black Money Act also gets triggered in such cases, and the penalty under Black Money Act for non-disclosure of foreign assets is 10 lakh rupees. So be careful on that front. At the end, as far as tax is concerned, just focus on the Form 26 AS and AIS. Every taxpayer has this Form 26 AS, which is, in simple language, it is like a passbook where all the details of your tax payments are there. But lately, it has become even more than a passbook. It has become a repository of every financial transaction that you have entered into, whether it is mutual fund investments, shares investments, property investments, credit card expenses, foreign remittances, foreign trips, whatnot. Everything is there. It is all getting reported to the government. It appears in the AIS or in the 26 AS. You must ensure that your chartered accountant, whoever is handling your tax matters, does 100% matching of your income tax return with 26 AS and the AIS. If you don't do that, rest assured, you will definitely get a inquiry from the Income Tax Department asking you why there is a mismatch. So please be very, very careful about this. Then this is important for most doctors in our experience, in our clients, that what is your lifestyle and how much are you showing as drawings for personal expenses. You will be aware that when you draw up your books of account, there is something called as household and personal expenses, which gets reduced from your capital account. Most people, spend in cash, which they earned in cash, on which tax is not paid, and thereby officially the amount spent for household or personal expenses is very small. So you may have a 2 crore, 5 crore, 10 crore practice, and your personal expenses are very limited. The income tax officer has every power available in the Income Tax Act to question you on this, and then if he or the ITO finds that there is a mismatch, they can certainly make additions in your hands by way of undisclosed income. So take care about this. The latest development as far as doctors is concerned is this taxation of free samples. all doctors would be getting the MRs, visiting them, and handing over samples from pharma companies. This has been going on for so many decades now. Now there is a new section in the Income Tax Act under which the pharma companies have to deduct TDS from the value of free sample distributed to the doctors. And it is not merely about the free sample distributed to the doctors, but even on the free travel or entertainment, if they, the pharma companies take the doctors out of India or to any exotic place at their cost, that will be treated as a taxable income in the hand of the doctor, and the pharma company will have to deduct TDS. So this is the latest development in the Income Tax Act. Please take care of this. If you are likely to make payment to a non-resident, or for example, even if you are buying a house or taking a clinic on rent, please do find out whether the other party is a non-resident. If yes, there is a TDS liability that you need to fulfill. If you buy a house or rent a house, you need to deduct TDS. Coming finally to the second part of the topic, succession planning. Why? Obviously to avoid disputes among your legal heirs, to ensure smooth transition and continuity of so wherever the doctor's practice, the medical practice is professionalized, is commercialized in terms of an organization, the succession planning becomes even more important, because there you are dealing with the passing over from one generation to another of the ownership of the the entity. Then obviously it happens at the time of demise or retirement of the person that we are talking about. And who all are involved in that? Obviously the legal heirs of the person and professionals who help you in drafting the will, who help you in the succession planning, professionals whom you appoint as executors to the estate, to your estate in the will, etc. It will depend on the nature of entity. If you are an individual or a sole proprietor or a partnership firm, in case of death, personal succession, Hindu laws or the Muslim laws, etc., depending on the religion, those personal succession laws will apply, unless the assets are bequeathed under a will. So if there is a will, it will override the succession laws, and therefore it is very important that if you want to pass on your assets to your legal heirs in a manner which is different from what is laid down in the law, then it is advisable to have a will, so that there is no dispute at a later date. If it is an LLP or a company, then that entity itself has a perpetual succession. So therefore it is critical that you develop a talent pool to step into the critical positions upon your demise or upon your retirement. The LLP agreement, shareholders agreement, articles of association, etc., need to be very carefully drafted, so that succession planning or transfer of shares, either way, that part is already taken care of in these documents. If that is the case, then it makes the whole process far simpler and less litigation prone. And structuring will have to be undertaken on the basis of specific, requirements. I already, spoke about this, but the most important thing about proper succession planning is that the tax outgo is minimized. I don't know how many of you have been hearing rumors about estate duty coming back. Every time there is a budget coming up on 1st February, in November, December, all the media channels start talking and guessing that estate duty is coming in this budget, as if Nirmala Sitharaman is, discussing on WhatsApp with everyone on a daily basis. But estate duty, if it comes, would be a huge problem, and therefore it is very important that when you are doing your succession planning, you also keep that in mind, that a remote possibility of an estate duty coming at a future date, if that happens, then are you taking care of that right now, even though it is not there today, or even though it is not likely to come in the near future, but are you taking care of it upfront or not? So with that, friends, thank you so much. I just leave the last thought with you, that as professionals, all of you are, doctors, we are chartered accountants, all of us are slogging day in and day out. We are, virtually black-collared workers in the sense that, struggling to earn our hard-earned fees. And those fees, as was mentioned earlier in the initial remarks, if those are not invested properly, then there is no point, because then the wealth stagnates. And we have heard, we have experienced so many cases where most professionals are fantastic at their job, fantastic in their profession, but when it comes to financial planning, financial management, the best thing that they can think of is putting the money in the savings account or in the fixed deposit account. That is the worst of the lot, and therefore I would strongly advise all of you to think beyond the traditional investment medium that are available at present, and go into better products which give you both security as well as better returns, and thirdly, more importantly, capital appreciation. Thank you so much. If there is any query, we'll handle it at a later date. Over.
We have to take personal care as far as tax compliance is concerned, and thanks for the piece of advice. And now let's move on to the GST compliances. Mr. Mallikarjun, please come over.
Yeah, good evening, friends, and thank you for joining us on a Saturday evening. I know it's a very tough challenge for you guys because you'll be busy with the patients, but this shows really you wanted to learn something, and learning is today's become the need of the hour, especially in the today's VUCA world, or when you say change is constant. We never expected pandemic that has come. We have faced the challenges, and now we know how to handle it, and India is the pioneers, we can say, or the leaders to the world, which said that, yes, we can give you vaccines, we can give you the treatments and everything. Similarly, here we are here to discuss on the succession planning, the tax implications and everything. And I'm sure that you have a lot of takeaways when you go back. So I'll be discussing today on the GST implications for the doctors as well as for the people who are running the hospitals. Now, there is a thin line of difference, as our colleagues have rightly discussed, care and cure. If I cross the border, it becomes evasion. But if I'm within the four walls of the border, within the boundaries, it becomes tax planning. So we have to be very, very careful, meticulously document it, understand it, so that our future is taken care. Today, the department has data, and the GST servers are connected, interrelated, integrated with the income tax department, MCA department, customs department, IceGate portal. Everywhere it is integrated with the banking servers. So we cannot say that I can hide information. We should be transparent, but at the same time ensure that we don't jump into any non-compliance issues. So coming here for the GST registrations, the first thing which we always have in mind is, should we go for a registration or not? Am I eligible to take GST registration or not? Am I required to take? If I take, what will be my challenges? Trust me, these are the questions I have when I need to see a doctor. Why I need to go? Can I spend it for a day or two, see, check some home remedies, or go to an OTC counter and take some medicines? Sometimes it never works. We need to go and see a specialist. Similarly, you may be having these questions. Yes, you are experts in your domain, but we are experts in our domain. So before we answer all these questions, we have an answer here basically. Now, we as professionals, we are never suppliers of goods. We are always suppliers of services. As a doctors, we give the consulting services. At the same way, we also give the consulting services. But what we treat is different. So for us, the threshold limit is 20 lakhs. The moment it crosses, we need to go for a registration. And then when we say that 20 lakhs, what it should include. So that will be very helpful for us. So if I have anything, suppose I have Apollo Group basically. We transfer material sometimes from one state to the other state. That should be part of my turnover. Or that should be part of my threshold limit. Or we have some export of services like vaccines we may export. Or today we have this online consulting. Tomorrow I may have a patient logging in from US, asking me for a treatment. In that case, how do we handle that? So all those things have to be considered in this. And this is purely based on two criteria, as my friends have already discussed. What am I will determine my tax implications. Am I handling it on a salaried basis? Sit back and relax, nothing to worry. But in case if you're on your own or doing the consulting services, maybe in the morning you'll go to clinic X, in the afternoon clinic Y, and the evening clinic Z. In that case, you'll be paid differently. The fee may be different. All that sum up has to be taken, and at that point of time, we need to go for GST registrations if my income is more than 20 lakhs, because you're talking about services. And another important thing what we need to keep in mind is, I'm sure some of you are the entrepreneurs also, being a doctor also parallelly. So this is even more important. In any of the hospitals, today we have the pharmacies. When we have the pharmacies, we have three categories there. One, it can be in the name of the hospital. Two, it can be outsourced basically. Or three, the hospital may own it, but with a different legal entity to keep with the compliances for some reason or the other. In all these three cases, the GST implications are a bit different. For example, if I'm having a pharmacy in the same hospital with the same brand of the hospital name, that sometimes it happens basically for us. So if that is the case, as we all discussed, healthcare services are exempted, which all of us are aware of it. But selling medicines in the pharmacy, is it a healthcare? Technically, no. It is sale of goods that technically coming there, because the patient gives us the money, maybe the outpatient or any walk-in customer, and he takes the syrup or he takes away the tablets or the capsules or the injections or whatever it may be. So there is a physical movement is there, transfer of title is there. So there we need to require registration. And if my hospitals or not the hospital, the pharmacy turnover is more than 20 lakhs, we need to go for registration. If it is an independent unit, if it is part of the hospital, then obviously if your turnover is more than 20 lakhs, including the exempted services like the diagnostic services, like my consulting fee, what I receive from my patients, has to be included. And if it crosses 20 lakhs, then we need to go for GST registration. So this is what I have given here, everything in images sort of thing, so that it is easy to retain. Because the research always tells whatever is seen in pictorial form, the retention is even for a longer period. So that is the reason we try to simplify for you and give it only in pictures for you here. Next slide. And this is the latest change which has come out in the hospital sector in the Finance Bill 2022. Sorry, not Finance Bill 2020, the 47th GST Council meeting. I'm not sure why they brought in this dimension. They wanted to increase maybe our revenues. The reason is, if my hospital room rent is more than 5,000 rupees, then GST is applicable. If my turnover of the hospital, where I have the consulting fee and everything, which is crossing 20 lakhs, though I've taken the registration, I'm not paying a single penny of tax. But I have a room rent from which I'm charging the patients more than 5,000 rupees per day. Then GST is applicable on that. And here, when GST is applicable, when we say, they gave us some exemptions like, back, sir. Back. Huh. Yes, if it is an intensive care unit or a critical care unit or an intensive neonatal care unit, in that cases, if my room rent is more than 5,000 rupees, it is exempted. But normal room charges if more than 5,000 rupees, then GST has to be levied. And when you file your returns, you can ask your accountant, or you should have this knowledge, cross-check whatever they're filing once in a while so that you don't land into the soup. Because we always believe in that cost of compliance is minimal compared to the cost of non-compliance. So this how many rooms you have given in a month on rent, 5,000 into 5% should be the taxable supply, where you need to collect it from your patient also. In case if you don't collect it from your patient, you need to make the payment from your pocket, which is again going to impact your profitability. So whenever you give this pricing, you please ensure that if it has to be disclosed clearly, documented, and collected from the patients, or else you'll be losing that 5% for you. Because the government says whether you're collected from your patient or not, I'm least bothered. Your charges are more than 5,000 rupees, you better pay tax. So that leads us to compliance challenges for us. So make it upfront, tell the patients, collect it from them, get it reported in your GST returns whenever it is filed. And the biggest challenge here is you cannot take the input tax credit. So that set off we call it actually, it's a technical jargon. So for example, I purchased a vaccine for say 200 rupees. For ease of computation, let me take that, I need to pay a tax of 10% on that. So it makes me 220 rupees, which I need to pay to my supplier. And assuming that I'm selling that vaccine at a profit of 50 rupees. I'm sure that in the normal business, we don't have that high healthy margins for ease of computation. So on 250 rupees when I sell, I need to collect tax from my customer also. When I sell it to my patient or a customer, they pay me 10% GST on that. So that is 25 rupees I'm collecting from my patient, and 20 rupees is what I paid to my vendor. Now, how much tax I need to pay to the department? It is 25 rupees minus 20 rupees. That is my input tax credit benefit. Now, if I set up a hospital room, I need to have furniture, I need to have ventilators in that, I need to have all other apparatus in that. On that, I cannot take input tax credit. So that is the challenge for us. So we need to plan it accordingly. And this is also another common thing. And there are a lot of litigation which people feel it is an interpretation issue. But friends, it is very clear. We have a provision which clearly says that if you are giving your patients packaged services, which includes the consulting treatment, which includes the hospitalization treatment, and the food, and the medicines and everything, and even the implants are covered in that. In such a case, it is not at all taxable. So whatever you have the documentation, whatever you're sharing with your patients, please make sure that it is documented clearly. Package includes consultation fee, room rent, food, implants, medicines, so that you need not collect GST. If you don't put it clearly, it may lead to compliance issues. So documentation is what is the need of the hour to play safe. And if food is given to the patient, if it is part of the treatment, which is the consolidated package, then GST is not applicable. But if one of the patients feels that I'm not able to get from my home, hospital doctors, the dietitians prescribe me better food, and which is healthy, I can recover fast. In such cases, the hospital bills it separately, apart from the consultation fee or the package charges. At that point of time, again, GST is applicable. And on nursing charges, GST is not applicable. And on the diagnostic services, we don't have GST. And when it comes to the purchase of equipments like the CT scans or the X-ray machines or the diagnostic tools or anything, sometimes we import it from Germany, the Siemens, most of the manufacturers are from Germany only. So we need to pay something called import duties. On that, we need to pay it, even though it is a healthcare services, maybe at a lower rate we need to pay. So that tax is applicable in case if I'm purchasing from the Indian market, I need to pay GST also at that point of time. And one more thing, what we need to keep in mind is, in case if I'm transferring one of my machinery from Telangana to say Karnataka or Madhya Pradesh or Maharashtra, that point of time, again, we need to discharge GST liability. Ambulance services, it is not taxable. And then inward supplies. So in the hospitals, we normally engage a lot of vendors like the security service providers or the housekeeping services. And in today's world, we need to attract clients or the patients, whatever you call it. You have this some social media presence also. So for that agency also we need to pay charges, or the laundry services which you do outsource it. On all those things, we need to pay GST at applicable rate, and predominantly in most of the cases it is 18%. And sometimes the hospitals own the property, the pharmacy or the food counter or something like that. But many a times they feel that it's a burden for me. Let me outsource that. Take the rent, sit back and relax. Whatever the rent we receive from those providers who have taken it, like the food courts or from the pharmacies or from the outlets, what we have care providers and everything, we need to pay GST on that. And if the hospital is leasing out a building, and if the rent outflow is more than 20 lakhs, then GST is applicable. We need to tell the landlords that GST is applicable on that, and we need to plan it accordingly. And there is a small differentiation between care and cure. If it is cure, it is exempted services and GST is not applicable. If it is cure, maybe I'll go for a clips for my mouth, teeth. It is coming out very awkwardly. Or I go for a cosmetic surgery. So in such cases, it is all care, and in such cases, GST is applicable. If you don't collect it from your patients, down the line when the department comes for audit or inspection or for anything, we need to fork out 18%. So we need to plan it very carefully. Yeah. And in case if I'm a doctor and I have some commercial property, I'm giving it on a lease or rental for some of my clients. In such cases, if my income is more than 20 lakhs, I need to take a GST, and on that, we need to collect GST from our tenants. Yeah, thank you all. This is what I have to share with you all on GST in a nutshell. So if you have any questions, we can take it forward after the other session is over. Thank you all for your patience hearing.
Thank you, Mallikarjun. It's a wonderful insights that you gave on GST, where the difference between care and cure is something which all the medical fraternity has to understand for applicability of GST or otherwise. So as we discussed about money, how do we look at money? And all of us possibly know how to earn money, but then how do we protect it and how do we grow it? Possibly we have an expert today. And may I request Jaykumar and Amruta to come over and please address us. Thank you so much.
Good evening, everyone. When it comes to investments, though I am from the part of the investment fraternity for a very long period of time, there are few do's and don'ts which probably I would like to share it with you, right? Because it's a hard-earned money, right? So one is that the easiest of the thing people do is that just keep it in the bank account, but it doesn't even take care of your inflation also, right? So one of the thing is that what we have seen, my 25, 30 years of experience, what I have seen is that if somebody wants to invest, say 100 rupees, 1/3 of the money goes into highly aggressive strategies, which could be into equity, mutual fund, debt, it could be real estate, it could be into your own business, and another 1/3 goes into moderately aggressive strategies, right? And there is a remaining 1/3 which people look at it as the retirement corpus, or they want to kind of pass it on to the next generation. And typically, when I look at the medical fraternity, both in India, we kind of work with a lot of doctors in India and as well as from across the globe, right? And we keep a very low profile. We don't come in the media and all. It's not required also for us, right? So what we have seen is that this 1/3 retirement corpus, so what we tell our investors is that this 1/3 corpus is what we are capable of managing, not the remaining 2/3. Okay? So it is important for any intermediary whom you are going to deal with, or any investment manager whom you are going to deal with. The first question one must ask is that what is that which you won't do, right? So today if somebody comes and says that, okay, I want to buy mutual fund, I say I don't have an expertise about it. Wealth management, I don't have an expertise about it. If you ask me something like, broking services, I don't have an expertise about it. Okay. So it's important for you to identify a fund manager. I'm not talking about multi-act, but it is important for all of you to identify a fund manager who will take your interest at first, then about his own interest, right? So when it comes to the asset classes, in terms of investments, there are multiple asset classes, right? Equity, there are multiple asset classes. So for, especially with the doctor community, so we deal only with corporate executives, family offices, and professionals like chartered accountants and doctors and doctors, engineers and all, right? With all of them, one issue they have is that they don't have the time to manage their money, right? And they end up keeping that money in the banks, kind of a thing. So what we are going to be doing in this particular session, because it's going to be just a 15-minute session, what we are going to be doing is that Amrita is going to talk to you about what are the asset classes, and of which one asset class she is going to, kind of dive deep into it, the mutual fund one, right? And tell you that what exactly one should look at it when it comes to the investments part of it. And from there, we are going to be taking you to the other asset classes and what is the kind of companies you should look at it. And she will also touch upon about why it is important for you to invest in the global markets also, right? Now, as part of your asset diversification, because many of the doctors, they'll be interested in sending their kids abroad at some point of time for their further studies and all. So it's important for you to create a corpus outside of India, right? We'll touch upon that also, right? Now I'll hand it over to Amrita to take it forward. So just to give you a brief about Amrita, she has been part of this entity for almost 6 years, and she kind of part of the team which kind of manages money for a lot of doctors and as well as corporate executives. So that is the reason we have got her to talk to you.
Good evening, one and all. Firstly, we would like to thank the team out here to allow us to share our ideas or our thought process rather with you all. This evening has been quite insightful, and in continuation to what Jaikumar sir said, so basically as investments, we've always said there are so many asset classes which are available: equity, mutual funds, and now even unlisted spaces coming. In mutual fund also, there are different types and categories of mutual fund schemes which are available. So out here, it is very essential that the person who is investing, rather the investor, is very clear about what are his goals. Why is he investing in a particular asset class? Because to offer, there is a plate filled with so many items. Is that food really the one which you require? So that's the reason when investment management comes into picture and the advisory comes into picture. Basically, you have to be very open or communicate very freely with your investment manager or your advisor to understand which are the suitable products. In case of, as Jaikumar sir said, for global funds, so basically for global funds, the dimensions are increasing. As globalization is taking place, we are able to invest across in US markets also, in other markets also. But what are the ways to invest into these markets? Is there only one way? There are multiple ways. Mutual funds is one of the way. In India, we have the system of LRS, where you can transfer almost like USD 250,000 to invest into foreign assets, which is in US and European markets or Japanese market. So there are many mutual funds which might not be only in India, but even internationally present, where you can invest. So we need to identify where exactly your investment should lie upon, and is it serving your benefit. In all this scenario, the main thing is creation of wealth. As earlier sir said, one is about earning and the other is about creating wealth and preserving it. So while earning is happening, there is a part of your capital, as he mentioned, that it needs to be in aggressive strategies or moderately aggressive. There is a part of your total earnings, which needs to be put into conservative strategy. So what exactly is wealth? We often say money, wealth. So let's simplify it a bit. Money, and just add a tinge of time to it. And there the wealth is created. So time is very essential in case of wealth creation. When you're investing, when you're exiting, it all plays a very important role. So wealth preservation, very important, is the time factor. And when we talk about wealth preservation, there is this thing of the concept of being conservative or having a conservative mindset. Just like how we have our intellectual personalities, physical personalities, there's also a financial personality within all of us. My conservatism might be a different level out here. His conservatism can be different. He might be more aggressive. So as an individual, we need to look upon it and try to understand. And when we are looking at it as a conservative mindset to a wealth, that time we need to ensure that our portfolio is built in such a way that is risk averse. It is more about preserving that wealth which is really hard earned, and thereafter ensuring that the portfolio which you're building in or the investments where you're taking, creating, those are having steady returns, may not be very high or may not be going with the market flow, like market might be increasing very highly, but you might be going very steady in that particular portfolio. But the drawdowns are much lesser. Drawdowns as in the fall in the portfolio. So that is what, in basic, when it comes to different products, you need to understand, you need to reflect, self-reflect about the products with your goal. And then, obviously, different type of products are there. You need to understand, deep dive. Every product has a different taxation angle to it. Equities, Indian equities, global equities, everything works very differently. So you need to deep dive and understand where is it heading to. So this is a basic of understanding of wealth and your personality. When we create wealth preservation, important thing is putting it in equity or mutual fund or fixed, wherever it is, ensuring that it is the highest of the quality. Now, when we say it's a mutual fund, are we really taking that risk or are we really preserving our capital? How do you understand that it is the best conservative portfolio for you? So for that, you need to understand for mutual funds or equity, you need to go deep dive into the risk. What kind of risk are it? Now, eventually, even if we say mutual fund, at the end it's linked to the equity market. So obviously it's connected. If the equity market is falling, the mutual fund asset class also is going to fall. So how is it that you can safeguard yourself from the risk, and what are the different types of risk as an individual, even as a professional, you will be able to associate? So something like business risk, when you're buying something, you'll ensure that the business is of good quality. When you're buying a stock, and then you're buying the business in a small quantity. So you have to ensure the business risk. And how can that be covered? That is by investing in a good quality stock, eventually a good quality mutual fund scheme also. So what kind of business risk can be looked upon? So there are various parameters. Just as doctor fraternity, you all have lot of back-end work. We might be seeing only the front end or the one side of it where you're treating the patient. But you might be working singly or with your team. But there's so many things, parameters you checklist upon. The same way, even financial professionals, we have a checklist of things. We have a process laid, like in our organization also, we have a complete process laid, how to go about with it. So at every angle, at every point, there is certainty that the process has to be identified. Just like you all, before taking into operation, you will have to ensure the medical reports or what is the BP of the person. The same way, before investing into a simple stock, also we need to, there is a lot of back end which goes on. So one of that is business risk. So in case of business risk, we try to, this is only one part of it, how business risk can be looked into. Like we see how strong a company is. Say HDFC Bank or Tata, these are just names I'm quoting. So what is it that is really strong for that the competitor or someone else from the industry finds it tough to overcome him? So that would be network effect. What is like network effect? Would be in simple language, for example, there is a doctor. Earlier, like there used to be family physicians in Bombay. We used to have a lot of that concept. And in that, when one person is referred, the other is referred. So 1, 2, 3, 4, everyone gets referred to one person, and the family physician kind of concept came about. That was a network effect. And even in today's case, for certain doctors, people do refer to each other. That's how the network effect comes into picture. Then comes intangibles, that is the goodwill which comes in. The doctors or even financial professionals build their own goodwill. The same way the respective business also builds the goodwill. So how strong is that goodwill? How strong is the economic switching cost? Now switching cost, for example, we can say in a hospital or clinic, you have a software. To move from one software to another, there is a lot of cost involved. Not only the system cost, but also in context to the manpower cost. You have to train them again. So it's not going to be easy for this kind of transformation to take place. So how strong is that system? Now, take the same concept, we take it to the business level. How easily can that business be replaced by some other business? And then comes economies of scale, which we say, but in simple language, what is the production? Like for example, if you're producing crocin, what will be its cost, or some highly specialized medicine? The cost of crocin might be less because there is a bulk production, but at the same time, a cost of a specialized medicine will be very costly because definitely the quantity is less in production. So these are slight inputs or insights into how we go about while identifying the quality of a company. So that is very essential. Let it be in equity or mutual fund or any investment. What is the quality of your investment or the portfolio? And even you can always ask the investment manager or the advisor, okay, this is the product you're pitching, what is the quality, what is it, and try to understand, and in simple language, it is understandable. Next is the balance sheet risk. Sounds very big, balance sheet and all, but I'll simplify it. It is just basically, is your company a net cash company? That is what, basically your total cash should be more than debt. Then it is a net cash company. So if you're having, say, even a smallest of an example would be if someone is there and saying, okay, this I'm selling for 50 rupees and the same product is, someone is saying this is for 40. I mean in product as in a business. So would you go for a 50 rupees or a 40? Definitely a 50. That would be the net cash kind of. I'm not saying the selling, but the net cash value. What is there with that company? So that would be the balance sheet risk. Having more of net cash, he is running in surplus. Next comes the valuation risk. Now again, when we say valuations, like how we think about doctors, oh my God, there's so many medical terms, how to do it. And the same way, you all think about us, oh, you all have such valuation names and figures. So to simplify it, valuation is very important. What time you enter the market, or what time are you purchasing, creating your own portfolio. You might be having portfolio for so many certain amount of money for days, but you might just invest at the wrong time. That would be quite challenging because, for example, now valuation risk, to simplify it, like in our system or at our organization in Market, what we do, we have our own proprietary model which we created, where there is a higher end and a lower end. And then say lower end 100 rupees, higher end is 200 rupees. The average is the fair value. That is the 150 rupees. Now, if you're buying the stock for 100 rupees, that will be at a lower end and you will always go for that range, considering the rest of the parameters and many more parameters are ticked. So we are thinking of buying it this stock. So in that case, if you're buying at 100, you will continue to buy till 150 because that was the mid number. Now, steadily, you know that, okay, now the stock is increasing even the more and it's going to 200. Would you, as a conservative, I'm not saying from an aggressive person might continue to hold it, but conservative person or a conservative investor rather, he would exit at 200 as per our system, which is laid down that, okay, we've reached at 200. So let the market go up 500,000, but the risk which you're taking while going with that flow of market from 200 to 2000 is quite a lot. So might as well, as a conservative investor, once again, you might say, okay, I'll just take that 100 to 200 ka profit and I'll just move out of the system, because when the market collapses, I don't know where my 100 rupees also will be. So this is how we look about while understanding the quality of business. So business risk, balance sheet risk, valuation risk. So these are small aspects, quite a big topic, which I've just tried to give slight brief into it. So that is wealth preservation. So when it comes to even mutual funds, so while equity is all about these companies, mutual funds, there is also one more thing which you need to look at. We always say, okay, look at the past performances, and we try to decide, oh, this fund is giving us a good return, let's invest into it. But is it really maintaining it right now? Is the portfolio the same way it was last time? Definitely not. A portfolio, I mean, depending upon the market conditions or whatever the fund manager might think, he might change the portfolio. So that's why nowadays they give a disclaimer that subject to market risk and past performance are irrelevant and all. But at the end of it, as a retail investor or even the corporate investors, we look even into the returns. But that's not the only way to look at it. Let's go a little way beyond it. There is some concept which is called a Sharpe ratio also. So what happens is like, and it's easily available these days because people have started understanding returns is one part. Sharpe ratio will give you or throw light upon how the fund overall is performing during the time of volatility, or how it is going during when the market is really churning up and down. So besides looking, not only looking at performances, but also looking at something like Sharpe ratio, seeing the volatility, what is the drawdown of that particular scheme? Let it be mutual fund or let it be some equity related portfolio management scheme also. So these are various aspects which you can look into, not only restrict yourself to the returns. Yeah, coming back, so this was what I covered for high quality. Other aspect is like when we say about conservative investors, there are many aspects which we can look into. Now, here there is one which we look into is no model portfolio. Like a mutual fund scheme, you invest on day one, you will get those stocks, and if you invest tomorrow also, you will get those stocks for that percent. But here in portfolio management services, we need not invest on day one, so we steadily build the portfolio. So what exactly the thought for you will be, what exactly is no model portfolio? So for example, so out here is investing say today, and his portfolio is created. So in that case, his portfolio is created. So, his portfolio is created on today's date and say 30%. And the lady behind, has created a portfolio 3 months back. That time it was a different percentage. So what stocks might be bought in her portfolio is generally bought in his portfolio also. But what happens is that there might be times when the valuation is high, so they do not buy, we do not buy it at this moment. And over a period of time, say 6 months, 9 months or 13 months, the portfolio will replicate each other. That is the no model concept. Active cash calls is basically being into portfolio management services. We can also take cash call as in on day one, we need not invest full 100%. We might invest depending upon market condition, say 30% only. So that is called active cash calls. And if market conditions are favorable, we might go to 70%. As a result of which, over a period, we evolve into coming up with this committed corpus model. Now, this is a trust-driven model because when we are saying that we are only investing 30% of your portfolio on day one, You might say, okay, 70% is going to be in liquid funds because that's one of the safest way of investing, keeping the funds in liquid fund when the markets are super high and it's only 30% your portfolio is built. So then in that case, we come up with the committed corpus model where you can, where the fund manager will say, okay, I need only this much of the funds and rest we will call upon as and when it's required. So that in that process, it is built across steadily. So and this generally, like we've come across clients and who come up with this commitment corpus model and they do abide by it. So this is completely a trust-driven model, and basically, no non-conflicting business model is very important. It's like we are having only PMS and no brokerage because it can clash into each other. So that's the reason. As a conservative investor, you have to be very careful. Is your portfolio built according to the time? Is the quality good? And is it being tracked also regularly? It's not that one time invest hua and ho gaya. No, it needs to be tracked. It needs to be revamped again and again. Just as you all check the health of the person again and try to come back, tell them to come back after 3 months, there's a review. The same thing happens for financials. So I would just like to conclude it. Basically, for a conservative investor, when you're investing, firstly, understand your mindset. Be confident about it that, okay, if this is my conservative portfolio, I require so and so percent, generally 13 to 15% on a conservative portfolio. Develop that mindset, nurture you, all of us have that mindset, nurture that mindset or that personality within us, and then at the end be value conscious at the time of different cycles. Generally, we observe that we say, like we come across investors who say like, oh, I'm ready for this. But as earlier Jayakumar sir mentioned, it's a very boring and needs loads of patience to deal with a very conservative strategy or to hold your portfolio in a very conservative way. So you have to be very value conscious and you should be able to sustain yourself in those various market cycles. Let the market run. There is an aggressive portfolio of yours which is will be running with it. Let this go just steady and calmly. And then slow and steady wins the race also. And last but not the least, it's like staying healthy, as you say, staying healthy is important. Same way, staying wealthy and generating wealth also is equally important. Both cannot be denied that, okay, I'll just earn and not invest. So it has to be parallelly done, as mentioned earlier. So keep investing, understand yourself, and invest accordingly. Thank you.
Thank you, Amrita, and thank you, Jayakumar, for your discussion on and advice on wealth management, wealth creation, and wealth protection. In fact, one of the couple of things takeaway for us is 1/3 in aggressive investments, 1/3 in moderate investment, 1/3 in safe investments is something which is there for all of us to take away. And of course, there is also a very interesting thought that was given. Wealth is nothing but money plus time investment into that money. Thank you so much. And for the concluding remarks, may I request Mr. Gupta to come over and conclude and vote of thanks. Thank you.
Thank you, Sachin. Thank you. So good evening to all. I think everybody, I don't want to stay in between your dinner and you. So I'll just finish. There is some saying, if you misbehave with a God, God will send it to doctor. Right? If you misbehave with a doctor, what happens? They will send it to God. Okay. So I just lighter side. And thank you, thanks for first KSB, who's the man behind this entire show. So thanks KSB for KSB, in fact, KSB and team. So they worked almost last few days to make sure everything is, all the things have been gone, all the things have been taken care. In fact, even travel for us, thanks KSB for all the support. Yeah. And of course, Sachin, who came from Bangalore, who's a moderator and keynote speaker. Thanks, Sachin, for all the wonderful thoughts, whatever the inputs you've given. And Amit Bhai, thanks from the Mumbai. He came all the way to Mumbai. And for only for this reason, that's what he puts a lot of, I think, you find interesting, right? Income tax related, many things even I noted. Some of the things, okay. So, of course, it's a very short 15 minutes. We cannot cover many things. Maybe you can hang over, when the dinner time you have any questions, Definitely all the speakers, you can talk to them. Thanks, Amit Bhai, for wonderful insights. And Mallikarjun, man, he's visual impact, okay. So, definitely, we like the presentation, the energy, the summarization. Definitely, I think many people have got the value addition on that. Thanks, Mallikarjun, for doing it. And of course, last but not least, Vijay Kumar and Amrita. And they all came from Mumbai for this reason. I know a lot of things is covered, but I know given the time is very short. Definitely, you made it within that time frame. Many things have been shared. Thanks for the value addition. So, of course, last, all the people who are here, without you, it cannot be anything, completion, right? So, all the doctors, especially, thanks, all the doctors who made it here. I know evening is is a prime hour for you. 6 to 8 or 6 to 9 is a prime hour. But you made sure that, taken care and came here. And hope you got some value addition from us. Definitely, it is a very short period to give all those inputs. So this is the event we started. Then while dinner, you can hang over with the speakers, anything, and of course come back to the KSB, who's staying here in Hyderabad. So definitely, we are all there to help you out. How do you explore both, and we can grow together? And many people think, GST, the income tax, the succession plan. What is this? I don't know. Something, So what we can see, there are a couple of institutions they serve the VCFO services where you take care of business, they take care of your entire finance, accounting, and all those things. Maybe you can talk to KSB if you need any help. So with that, I know dinner is ready. KSB, you want to do?
We actually, recognize some of the senior doctors present. It is actually really inspiring us to, note that, senior doctors like Sir and Sir are, really available in this evening, and then, trying to understand our subject. As we are all discussing, this subject is definitely a, dry subject. To though you, put all your best efforts. So then when we try to understand your prescription, when we try to understand your medical language, how difficulty we face, maybe similar difficulty you may be facing, though we use it multiple times. Anyway, so the inspiring factor here is, as I said, when we look at senior doctors like people, and then interestingly listening to the whole session, that really inspires us. Thank you so much, sir, for attending the session, and we'll be happy to conduct this kind of seminars frequently, and we request all of you please relax and have some cocktails and then dinner. So thank you so much for being with us. Thank you. Sir, it's fine, sir. Yeah, please. Correct, sir.